Hello, today is Saturday, the 1st of September 2012. A lot to go over, and this is my video checklist. Also, this is the order in which I'll be showing the particular information. So, because there's a lot, it might be two parts. I'm not too sure as I'm doing this. And yeah, so let's get started. In the first section, which is really not the section, the first I'm going to talk about Ben Bernanke and what he stated yesterday. And then next section, talk about gambling investing. This is to follow up from the previous video. Also continue on follow up will be the options, more information regarding it. There was a question I want to go over. Number 3, we got Labor Day coming up on Monday, which means here in Canada at least, it's back to school. So just a quick little thing that I want to talk about. Not as long as I was originally planning on doing so, but I will anyway. Section 4. Go over silver, go over the last call with the 3062 short as well as the long play as well. Look at the Friday intraday charts, the hourly and the 1 minute time frame, then move on to the daily, the 2-day, the weekly, the monthly, and the 3-month chart as well. Then move on to gold, the daily chart, the 2-day chart, and the 40-day chart. The gold to silver ratio, an update from a week and a half ago on the 38-hour chart. And then finally, we'll go to Morgan Stanley's chart. We'll look at the 2-day chart where there's looking like a possible fib breakout. The 8-day chart looking at a bear market. 15-day chart, I call this 2008 crash success. October 14th, 2008 daily chart, looking at wild moves. And the multi-month chart upcoming, a crash indicator will be showing. And the final section, I'm just going to say goodbye because that's the end of the video. So let's get started. Let's first talk about the Federal Reserve. I had no idea yesterday morning they were going to be speaking. That's the second time in a row that has been the case. I'm going to go over 4 different small paragraphs on the economy.money.cnn.com article. Number 1. The odds are strong that the Fed's asset purchases will make money for the taxpayers, reducing the federal deficit and debt, Fed chairman stated. Well, there is no reducing this debt unless they really want to. They can make fiat currency illegal. That would eliminate the debt right then and there, but it's guaranteed to exist by simple math. Number 2. First, here's an important distinction. When the Fed buys bonds, it's not spending the government's cash. Rather, it creates the money itself, basically by electronically crediting the money to banks. That's very important to know because that's how easy and really fraudulent this whole system is. The third paragraph, the Fed then earns interest on the treasuries it holds, and while interest rates are very low, the sheer mass of bonds the Fed holds nevertheless makes for quite a windfall. Again, of course they're going to be making this on interest rates because that's how they make it, and well, interest is guaranteed to cause debt because it is not created. The Fed earned a $77.4 billion profit last year, and of that, most was from interest payments. Geez, I wonder why. The year before, it earned 81.7, and then in 2009, it was $53.4 billion. Okay, next up, let's take a look at, just want to go over a few different things. And I state on the bottom right-hand side, the lines are from thegreek.com. This company states their page is gambling and not investing. And that's false, actually. So I want to clarify this right now. Let me see if I got this. I got to actually find the, here we are. The gambling reference on the Greek page. This is a sports book. They make money with wagers on sports. The Greek Sportbook should be your first online gambling sportbook choice for the best action anywhere on the net, as well as the link on the bottom of the screen is entitled Responsible Gambling. So the page twice uses the term gambling. You're not going to get this, of course, on broker pages. Now, they did, however, use investing reference once. So that's why I stated what I stated was wrong. The Greek Sportsbook is a must-have for the smart veteran sports investor who enjoys following the odds as much as betting them. See, they used the word investor for somebody who was smart who enjoys following the odds. That's really what it all comes down to within these games. Games, of course, that have skill. You need to be smart and be better than the average person within the game. Okay. So let's move on now. Let's move on to the options. I was talking a lot about these little options in here, and one person was commenting regarding this option here, a $50 call option for 69 cents a share. Let's point out that if it comes to like $100, say in a year from now, this thing would hit large for profit. But let's take a look at some information here. The question I was giving is, basically, I'm daring to set aside a nice dinner's worth of fiat dollars to get those 2014 $50 calls. I've never done anything with options, but hey, in a year and a half, a lot can happen. It costs a small ounce value to get the ticket to a jackpot that may well go out or become a very popular ticket before it expires. Is there risk one should be wary of beyond the option price paid? From Cloxy, probably pronounced that wrong. Regardless of the fact, the risks to be aware of are there are fees in buying and selling option contracts, usually small, however, maybe $5-6 flat, maybe $1 a contract, or I don't know, but just small fees anyway. Number two, the bookies are the banking system who have a track record of changing, playing with the rules, or at least giving you stuff that you may not expect, so that's always something to keep in the back of your mind. Number three, if one buys 75-cent options at $75 a contract, because you multiply it by 100, and they get 20 contracts, that means it's going to cost them $1,500. If the option price rises a lot higher than the purchase, then you will not be able to take the option, but will be forced to sell. So how this would work out if you buy 75-cent contracts and they're worth $6, $7, $8, $9, $10, $20 a share for the contract, how that would work out, I've never been there, so I don't know. And finally, the banking/legal tender collapse/exit strategy. Will you be affected on the wrong end? Sometimes winning is the same as losing. Let's assume things really break out. You have a banking collapse. Silver goes to $250 an ounce. Gold's at $5,000. And now you're trying to cash in on those contracts that are worth $200 a share that you paid 75 cents for, but you're not going to get it. Or when you get it, it's just not going to be worth anything. So those are some type of things to be aware of. Just moving further within the options. If the close of the expiry dates, let's say April 2013 call options are 15 cents for the $60 variety. If the close of the expiry date, the price action has risen to 90 on SLV, then your option will be worth a little over $30 to sell for what originally cost 15 cents, even with fees making the cost 30 cents a share. If you sell at $30, you will make around 100 times the investment. If, however, your investment wager started at $1,000 in principal, then the value would be $100,000 if you cash out, and about 5 times more to take the shares. Also, if the price is $70 and there's 4 months away from the contract, then you would still be in the green for positive gain, as there is time factor included upon them. For example, with SLV a little over $30 on Friday afternoon, the $33 call options that are $3 out of the money currently are selling for almost $1 a share for December options. Therefore, it is possible to take a wager for price action to go very high or low and profit, even though it never touches that target level. You know what? That's going to be it for options. So next up is back to school. I'm not going to go too much upon this now, but within it, with school, I feel if it's high school or any type of college, university, any type of math, finance, economics, even skilled trades, I think it's almost a absolute must for a teacher on the first week of school to say, okay, I'm going to teach a little bit outside the curriculum, stuff that's very important. And I'd like a raise of hands for anyone who knows what fiat currency means, because this information not many people know, so a couple people raise their hands, and well, there you go. I'm sure to get fired as a teacher, but I think it's very important for people in high school and later to know how, of course, money and currency is created. Section 4, now let's go over silver. Okay. Let's take a look at this hourly chart on silver from Friday. This was the move, and it's so often I love seeing this, where you have the breakout, this big line that has that failed breakdown before it goes higher, an extremely common thing to see. Now, the wagers that I was talking about was one to short at 30.62 and then to get out at 30. And I was saying this back in here. So let's take a look at how this played out. Well, 30.62 was right in here, which meant that you got in. Your stop was above 30.90, which meant you never got stopped originally. So it'll be easier to show this on the 1 minute time frame. So let's do that. Let's take a look at this on the 1 minute, and let's take a look at this. This directory is the directory in the more information box. All the images used, with the exception of one, is on August the 31st. And these are the images that we'll be going over, so quite a few. So let's take a look at the 1 minute chart for silver on Friday. So therefore, you already were in your short at this point. You got in at 30.62, and your stop, of course, was above this line. Now, the reason why the stop was above that line was because this was the 2/3 retracement level, and that big level where resistance would be found if it happened to go there. So you'd be better off to put it to an area because you're going to win more often, basically. So then it started to come back down to this key level of support. And as we see this, everything's playing out as it should. You're seeing the market go down. No reason now why this thing isn't going down to 30. You don't sell here because it's 30.25. It's not 30. And then all of a sudden, boom, there it goes up. Up it goes. So where would you get out of this position? Is it above this high? Maybe in some people's methodology it might be, but not in mine. The answer would be pretty much in here. And the reason for this is because, well, it's not supposed to do that. It was supposed to make a lower high here, maybe even here somewhere, or at least, again, find resistance here. But something's telling us that there's forces coming through, and that the major call of going to 32.5, 32 2/3 looks like it's coming into play. Now, as far as going long was concerned, if you were waiting to buy at 30, well, obviously that did not occur because the price didn't go there. So where was a good time to get in? Well, same thing when you get in here. Well, that's one of them. However, when you have this big move and you see that you're right here, you're at 30.84. Well, what do you see? You see that you're back to the 38.2% from here to here. It already went up about $1 in just a few minutes. It's now pulled back about 40 cents and 5 or 6. Well, there you go. There's your opportunity to get within the market. This little fall, that's not going to stop you, but not even going further than that. As we look at this chart at 14:56 GMT, this is a very strong pattern. Why? You got the uptrend line. You're obviously on this key support level, but you got this uptrend line, and you really created more of this ascending triangle. Yeah, it looks as if it's going to break it at this point, and it obviously did. Okay, so now let's move on. Let's move on to the daily chart. We'll just keep on going further from the charts I was showing at the start. There's a daily. And yeah, this will be 2 parts because I'm already well past the 2-minute or 10-minute part. Okay, so we're looking at the Fibonacci from here to whatever this high happens to be. Now, I stated that for this line to go more closer to the top part and for this line to go up here, then the price really also needs to go to that 32.5 level. And I really don't see why it's not going to do such a thing. Now, Monday's a holiday, at least for the United States and Canada. I still think that silver will be trading. Don't expect it to be too volatile on Monday, but I don't see any reason why it can't break 32, at least on that particular day. It did not come back to 30, nor did it come back to this band, but you're still seeing how on the, basically for the week, how it was giving us the sideways correction. Markets correct either one of 2 ways, either through price or through sideways action in time. This was a situation where it did not correct through price, rather it corrected through time. Let's look at the 2-day chart now. The 2-day chart is pretty much the same as those 31-hour charts I've been showing recently. It's mainly to show the previous high, but I also can show this low that was matched in here as well. 30 was not resistance. No. And what I state is when it's not resistance at a significant area like this, the things you look out for is one, that quick pierce above where it goes above it and then it's just going to manage to go back below it. That is not the case. Number two, I'm looking for support at this level, and oh boy, did that baby ever fail, as I was talking about at the start of this video. That didn't happen, at least not now. And number two, a fast move up to this next level, and that's what looks to be the case right now. That key level is 32 2/3, but quite frankly, don't be surprised if it even comes closer to this area here. And I'll show you that because of multiple time frames, maybe there's another Fibonacci level in that area. Okay, so let's take a look at that. Let's take a look at that on the weekly chart. And that's that 33 area right there, 33.42. We're looking at Fibonacci from this high of up close to 50 and the lows of barely over 26. Therefore, we got this 18 average, which is starting to be rising. And it does seem as if it's going to be very fast moving towards this level. The key support level right now, just quickly looking at this, is still below 30. And it's not only below 30, it's even around 29. Of course, there's no guarantee that's to be the case, but on any pullback, I'd be looking at this little band area there to be the level in which support would be found, or even again 30, but I still think it's going to be moving up before it significantly is moving lower. Then when you get to a certain point, you move here, you get to one of those then what situations, going to say the same thing. Is it going to be A, that pierce above where it goes lower? Is it going to be that resistance? Are we going to find support at that level where we go something like that? Or is it just going to have that fast move to that next level? And of course, that next level is 38.92. We'll pretty much say 39 flat. All right. Let's now take a look at this on the monthly chart for silver. And here we have it. This support level here is a 23.6% Fibonacci retracement. This is 38.2, this is 61.8. So the next significant level above this is where it's been finding support for the last year. Of course, this trend line, we're right at the upper end within it. Same thing as I've been saying for the last so many few months, breaking above these levels, this thing is going to complete its correctionary phase, and this thing should really get going again. Now, the volatility that I was talking about, a few weeks ago, I was mentioning how August and July was like nothing for volatility. Well, this is now the most volatile month since like January. But overall, it's pretty much a standard month, but it looks like the small volatilities thing is now picking in. You have a short period where things, it's like an indecision kind of mode, then boom, the decision's starting to come into play. And we'll make this the final chart for this part. And we'll look at this on the quarterly time frame. There's really not much to go over upon this. Of course, it's in a uptrend. And if you look at the correctionary phases that it's had, okay, this was a small correction in here, broke resistance. Then you had this point here, you corrected as the deepest correction, you broke resistance, you kept going. You've had another correction, so what do you think is going to happen when resistance breaks? It's probably going to keep going, as that's what bull markets do. Okay, so the next video we'll take a look at gold. We'll take a look at gold to silver ratio, and we'll take a look at Morgan Stanley as well. I don't know if this will be uploaded today on the Saturday. It might be. If not, it'll either be Sunday or Monday. And have yourself a great day. Bye-bye.